This is our Forex blog for February 4th, 2011. One of the first things we do each day is look at the currency meter and find which currencies are strong and which ones are weak. You know, the yen, daily, weekly, monthly trends down, and starting around 10 started to show some weakness, 11:30 even more weakness. The daily, weekly, and monthly trend of the pound is up. Although earlier it was down, you can see extreme weakness earlier today, then less weakness. Started to show some strength back in the direction of the longer term trend. You might have been looking for some pound yen trades right there. This is a trade, the first one I didn't take, but the second one I did. You can see starting at 10, this one went up and broke back above the hourly moving average right here. Some traders might have bought the breakout right here. I certainly would have, but I wasn't trading at that time. I actually bought this pullback. It's up 9 pips from where I got out. That really annoys you. Anyway, it pulls back. You get into that trade right there. I actually got long up here near the high at 97 due to a different system, but you know, that's one of the strongest trends. Daily, weekly, monthly trends up. You buy it, and if you had got in here at 70, you'd be up 55 pips right now. Um, you know, the Swiss, extremely weak. Daily, weekly, monthly trends down. 5 o'clock had a lot of weakness for 5 and 6 hours. The dollar showed some extreme strength today during that time, although the weekly and monthly trends down. Preferably the daily, weekly, and monthly trends up, and the real-time trends up. But you know, you can still do tiny scalp trades, 5 to 25 pip moves, when you have extreme strength and the daily trends up. So you know, you're looking for dollar Swiss buys at 5. Here's 5 o'clock. Market's kind of going sideways. You know, it goes into a little sideways, you know, wedge pattern right here. You might have bought the breakout at 7:30. This fib level is a very high probability resistance area. It's also the monthly pivot, which also has some major selling. You might have got out of the trade there with about 25 pips. Bought the pullback. Obviously, this was during the U.S. news announcement. Exploded up about 50 pips. But the cool thing is, most news announcements do come out in the direction of, you know, the longer term and the real time trends. You know, somebody anticipated what the dollar effect would be many hours before, you know, it happened, and so it was strong, and they certainly weren't selling it a few hours before the announcement, and the Swiss was being sold all day. Another one that was, you know, sporadically sold and was also extremely weak on the daily, weekly, monthly is the New Zealand. So from 5 o'clock onward, you know, with a strong dollar, weak New Zealand, you're looking to sell it. Weak New Zealand, strong dollar. You sell the weak one. So here's, you know, coming up to 5 o'clock. There's kind of a lot of just choppy sideways action right here. And I wouldn't have taken this trade because the fib level's right here. You don't want to sell right in front of major support and where there's likely to be buying. Obviously, the market went through that fib level, came back up, never really made a higher high on the day. And when the news came out, because this was one of the weaker ones, you might have sold this at 77.10, and it pulled down to 75 area down here. Good for a 35 pip move. I probably would have rode this thing down until it kind of ran out of steam down here at the next fib level, and you can see that fib level also acted as support. There's a monthly pivot level and the 20-day moving average right there. So 3 major areas where there's likely to be massive buying orders. So you exit your trade probably with 25-30 pip profit. But the currency meter, you know, lets you know which ones are most likely to move. The Australian, very, very strong. Daily, weekly, monthly trend. From 2 to 5 it was pretty strong, and from 7 it started to get a little strong again and lasted till 10. And because the dollar is also strong today, you don't want to trade it against that. You want to trade it against one of the weaker ones. Daily, weekly, monthly trend on the yen's down. Didn't really have intense weakness until later, but you know, look for Australian yen buys for most of the day. You know, pullbacks or sideways consolidations. Here's a Fibonacci profit target level that I drew, and if you had this up last night, you would have seen that acted as the high. It's not above the upper containment band. You know, I don't really see. I might have went long right here and been very disappointed when it didn't take off. And when it pulled back and didn't break the hourly and took off again, I might have given it another shot. But this one never really led to much. That fib level I drew last night was really a line in the sand, and there was massive selling there. If I took that other trade and it kind of went up with not that much momentum, I would have got out of there with a 5 or 6 pip profit. You know, this increases your odds of having a winning trade, but you know, sometimes they don't just take off. You know, the yen when the pound was super strong on all time frames, the yen's weak on all time frames. You could have also bought the pound New Zealand here coming up to 11. Let's bring that one up here. Super strong pound, GBP, NZD, super strong pound, weak New Zealand. Now earlier, let me see here, why did that fall earlier? Okay, from 8 to about 10, the New Zealand was very strong and the pound was weak. That's why it fell. So usually you don't want to buy underneath underneath the hourly. You do see this kind of double bottom right here with less weakness, and because the longer term trend's up and it hit the lower containment band, aggressive traders might have got in there. More than likely though, I don't think I would have taken that trade. I don't like to buy currencies that are underneath the hourly. If it had gone up to the hourly and kind of went sideways here for 20-30 minutes and then broke out, I would have bought it. Let's bring this up on a tick chart because there might be entries on this on a tick chart that we can't see on a 5-minute chart. Here's a little mini scalping class and how I use tick charts to find high probability trades. Okay, so this actually did kind of go up and kind of consolidate right here. You might have got in, and there's also a nice little flag pattern right here that's also looking pretty decent. But it didn't really lead too much. You got maybe in this at 209.05, and it kind of went up sideways here around 36. You might have made 25-30 pips on that trade. Because it's up so far from the lows of the day, I don't think I would have bought this little pullback here. But it did break kind of a trend line earlier today, and one of the things that we were planning on working on is a trend line alert tool. And anytime a super strong weekly, monthly trend that's up, and then you get a pullback here, and a trend line gets broken, I would have preferred. I like trend lines that get hit 3 times. This one really only got hit twice. If it hit here and pulled back again and then broke it, it's a higher probability trade. I don't really personally use trend lines too much. I do visualize them on the chart, but you can see it's still going up. If you did buy that pullback right there, you'd be up about 20 or so pips after the spread. It's one of the strongest pairs. Super strong pound, super weak New Zealand, and that's our concept in a nutshell. You trade with the trends until they go statistically too far, then you wait for the momentum to end, and then you can dip your feet in the water if you want to do some counter trend trades.